But we do have stuff to talk about. It's time to find out what's happening with you and your money on Wall Street. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well today. Flitting around here real quick, trying to pull up some tip sheets to figure out where we are. I was sliding through the door, kind of right about the time you called in. So we're
been there, done that. Well, I'll give you a chance to look things up while I summarize things, talking about a quiet day. It was really a really quiet day yesterday on Wall Street. We had red ink, but it wasn't very darn much. The Dow was down 46.5. Standard & Poor's was down by $1.50 or so, and the NASDAQ was down by just under 14. That in today's world of herky-jerky changes up and down on the indexes, I'd call that basically a flat day as we kind of sit on our hands waiting to see what the Federal Reserve does tomorrow. They open up their two-day meeting today. And as usual, the last week or so before the meeting, everybody shuts up unless the Federal Reserve chairman gets a prank phone call, and that was the big news last week. We're pretty much 85-90% sure it's going to be a 0.25% rate bump unless they surprise us and decide to start the pause early. What do you think?
Well, it's hard to read the Fed, right? It's we'll just have to wait and see what happens, and we're pretty close to that drop dead date anyway. So, but looking yesterday, I do want to talk just a little bit because I know I took a gander a couple times during the day at what the markets were doing, and they started off to the downside. About midday, they really kind of ratcheted up a little bit, and then I guess people were taking some profits off and ended up in that little bit of red ink you saw there. But it was kind of a roller coaster day yesterday.
Yeah, it absolutely was. I mean, I look at the major indexes. About 1 in the afternoon, we were actually up by a little bit. And it's just by the curvature, it looks like it was no event. We just kind of sort of ran out of steam during the day as folks who wanted to sit on their hands won the battle at the end of the day.
I think so. I mean, I think that's really what happened. We got maybe some profit taking there a little bit and took some time to do that. But yeah, we got bigger news to come. I guess that'll come out tomorrow, won't it?
Absolutely, yes. 2 p.m. tomorrow afternoon, we find out what the Federal Reserve is going to do to us. Tidbits I came up with this morning. There was a story I read on one of the tip sheets. J.P. Morgan kept more than 800 people up working overnights at times over the weekend to make that bid for First Republic. It is now officially part of J.P. Morgan, and they paid $10.6 billion for a bank with its toes in the air, but it does kind of solidify J.P. Morgan Chase as being the biggest bank in the country. I hope Jamie Dimon knows what he's doing, but even if he didn't, I think they've got enough money to be able to absorb the losses, don't you?
Well, I think so. He's probably looking at the real estate portfolio there and thinking that even if commercial property takes a nosedive, a lot of people are talking about that they can weather through that storm and actually maybe foreclose on some properties and come out ahead.
Evidently, that's probably what they're thinking of because there's obviously some hard assets available in there. I keep reading the tip sheet saying bad management is the cause of all of these bank things. But, you and I have been talking about it. Okay, the interest rates, talking about what the Fed's probably going to do tomorrow, in absolute terms, aren't that monstrously high, but it's been the absolute fastest we've ever made that kind of a point jump on the reference interest rate out of the Fed. And basically, that was what we read about First Republic as well. The bank couldn't keep up with all the changes on interest rate yields on the federal bonds they all used to be able to hedge their bets and ended up getting behind the curve. Silicon Valley Bank was the first one to do it. First Republic kind of got stuck in the bus in about the same maelstrom. This is going to make the deliberations of the Federal Reserve Open Market Committee over the next 2 days. I'd love to be a fly on the wall when somebody actually says maybe it wasn't all management's fault.
Well, I think that this may end up being a doctoral study, right? That they'll parse through everything and really dissect what happened at First Republic as a case study in our educational system when it comes to business, because I think they'll find that, yes, management played a role, no doubt.
Hmm.
But I think that the Federal Reserve has to step up and take some of the blame because of the fast increases. Because I think that it's put pressure on a lot of banks, and First Republic was just a little too far out there to be able to absorb it.
Yeah, and you don't have to be a long way behind the curve when you're starting to make monthly 0.75% reference rate increases, just a little bit behind the curve, and all of a sudden your hedges are all upside down, and you find yourself in trouble when there's even a relatively modest number of withdrawals coming out of the bank because somebody gets nervous.
That's right. So I think that when this thing gets dissected, I think that the Fed will end up with some of the blame.
Yeah, point very well taken. It'll be interesting to see when somebody finally does assume some blame and doesn't constantly put out the press release saying it's all idiot management. Speaking of switches on the First Republic, they were big enough to be part of the Standard and Poor's 500. Since they don't exist anymore, the Standard and Poor's people needed to find another stock, and the new addition to the Standard and Poor's 500. Axon, a maker of tasers, is replacing First Republic in the Standard & Poor's 500. My first reaction was I had no idea that making tasers was that big a business.
Well, yeah, I'm surely they make something other than tasers. I'm sure tasers just kind of hit the headline as for the whole S&P 500 thing.
It's a new company that we're going to have to learn something about, though, because they're going to be capable of being a market mover from now on in, since they're part of a major index. There's an old phrase about sell in May and go away. I suspect this year, with all the events going on, that old truism isn't going to happen this year. What do you think?
I'm with you, Dave. I'm thinking that this might not be the year you want to do that, with all the ups and downs and who knows? I mean, we may look back in September and say, well, that may have been the smartest thing you could have done. But there's a lot of things going to happen between now and then.
That's absolutely true. There's just so many moving parts going on. One of those moving parts, of course, is the annual war that we have in Congress over the debt ceiling increase that's going on. And one item that I picked up today, now Treasury Secretary Yellen is saying, oops, maybe we were wrong. Maybe we don't have until the middle of June. Maybe we're going to run out of money as of the 1st of June. And I'm saying, okay, fine, you're playing chicken with Congress. Congress is playing chicken with the administration. But if all of a sudden this close in, you're 15 days off and figuring out when you're going to run out of money, I kind of take that as an indication that we might be spending too much. What do you think?
I'm thinking so, right? If you think 15 days is going to make a difference, then maybe you need to slow down what you're doing and conserve cash a little bit more. I mean, that's, if you're a businessman, that's what you'd have to do, right? If you think, hey, cash is going to run out, what would you do? You would start cutting your spending and increase your collection levels, right?
Absolutely, and you and I've gone through this drill 100 times now in the time we've been talking. We all know that the debt ceiling is going to end up getting extended. It's going to happen at the last possible minute. They're going to play chicken back and forth, and then finally pass something that both parties, both the Congress and the president, can agree to, and it'll happen at the last minute. But suddenly Yellen introducing a moving target saying, oh gosh, my math was wrong. I must have forgotten to include a check in my checkbook, and it's going to be 15 days earlier. That just adds one more level of drama to a plot line that we've already seen played out 100 times so far.
Exactly right, Dave, and poorly played at that, right? I mean, let's don't add any more severity or any more pressure than what we already have to get this job done.
None of these bozos have gotten an Oscar nomination for their acting jobs, have they?
No, they have not.
Lordy. Earnings season continues. We actually have some hard numbers out there, and one of the companies you don't hear too terribly much about, but it's kind of indicative of a change in the way that the economy is going. Off-site learning and at-home learning got really, really hot, and a bunch of companies got really hot during the COVID pandemic. I gather the bloom is kind of off that rose for one of the companies, huh?
Well, I found this interesting. It's the company's called Chegg. That's CHEGG. And they had a good quarter for the last quarter. They topped expectations on both the top and bottom line. And so good news there. However, they came out with this little quote in their report that said, The CEO said he expects artificial intelligence is having an impact on our new customer growth rate.
Huh?
Yeah, and that caused a couple companies to downgrade them from basically hold to from buy. And so, what are they doing? They are taking a bath this morning. Sheg is down 42% this morning. Think about that. It opened up at somewhere around $17, $18, and now it's down to less than 10. 45% down right now. Yeah. Yeah.
I was giggling about this earlier in the week that all you got to do is mention artificial intelligence in a positive light, even if you're Pepsi, and it adds to the gains that you get. Evidently, when you say artificial intelligence could be a threat, that's also a ticket to make a stock that beats the street fall like a rock, huh?
I guess so. I guess so. But we
Jeez.
did have some good news, though. I just want to start with the bad news so
Yeah.
that we could build from there, Dave. And so let's talk about another high flyer, and that's Uber Technologies. Uber had a good quarter. They topped their revenue number by a little bit. They beat on earnings. I say beat on earnings. I should say beat on losses, right? They were expected to lose 9 cents a share. They only lost 8 cents a share. Revenue was, again, better than expected. They are up 9.3% this morning.
Cool. Uber is almost starting to become like Kleenex. Calling Uber, it's almost a generic name. I never thought that business plan would work given all the stories, but it evidently is going to be something we're going to have for the long term.
I think so. I mean, it's a real thing, and it's popular, right? It's a good way to get around when you're traveling for sure. And even people in the cities, right? That's another cab alternative for them. So
Absolutely.
we had a big drug maker, Pfizer, reported as well. They beat on top and bottom line. And so that was good for them. They are, their COVID numbers are falling. Their vaccine has declined substantially. I think it said like 75% decline in COVID vaccine sales. But still, they beat, and they're up about 0.9% this morning. So still heading the right direction. As we
they're one of the companies that really was kind of at risk given the fact that the COVID vaccine was such a money machine for a couple of years. They're getting around the bend in the supply.
Yeah, exactly. So I
The
got two
demand
more
curve,
for
right?
you.
Okay.
Yep, I got two more for you. I've got another bank, HSBC, the global bank. They they had first quarter earnings that beat the estimates. But they also came back. Well, they announced a $2 billion buyback as well, share buyback. So that didn't hurt them at all. And so they're trading up almost 5.5% this morning. And then the last one I have for you deals with the travel industry, and that would be Marriott International. Marriott beat on top and bottom line as well. They had a pretty good quarter. They came in at 209 on think about this, $5.6 billion of revenue. Pretty big number. Yeah. Compare that to $1.84 they were expected. That's a pretty good jump for them. They're up about 2.5% this morning.
All right. Resetting the table. It was kind of a fractional loss on Wall Street yesterday. I described it as sitting on their hands waiting for the Fed. 45 minutes before we open this morning, what are we looking at, Phillip?
So, Dave, we are looking at some red ink. And before I do that, I want to tell you that, remember, we got Morgan Stanley laying off 3,000 people too. We kind of missed that little blurb, but
we did. I'm sorry.
Yeah, that's okay. That's all right. So, hey, we got a lot of red ink this morning. It's not big red ink, but it's still red ink. The Dow's down 1/4 point. The S&P 500 is down 0.2. The NASDAQ 100 is basically flat right now. The VIX is actually getting a little bump up, almost 2.25%. The other side, we got silver, a major retreat, because yesterday I think it was back up over 26. Today it's back down below 25. So it's been a roller coaster. It's down 1.4% to $24.88. Gold is up from the close, but down from yesterday. It's at $1,994 an ounce. And crude oil is down 0.75% to $75.11. And I think that's about where it was yesterday, Dave.
I was going to say about where we were yesterday at this time. Overseas markets, the Asian rim fractionally up at the close this morning. The European markets are looking at us and saying they're not going anywhere, and neither are we. We got a little bit of red ink, but nothing really big in any major exchange over in the European community either this morning. Getting a plan for retirement counts for a lot, and that plan could change depending upon what your age and position is at this point in life. Time to get it customized for me. Phillip, how do I find you to get that plan done?
Then give us a call at 863-382-0037 to schedule their core retirement design, where we'll help them design the retirement they always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And we'll do it again tomorrow morning here and catch you up to the minute on Light FM. Phillip, thank you so much. We'll see you then.
All right. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope your Tuesday is off to a good start. Talk to you again tomorrow, same time, same place. Until then, have a great day. Bye now.